A slew of XRP ETF proposals are rushing through the approval process, and if past events are any indication, the cryptocurrency's value might skyrocket 30–60% in the week following the announcement. I'll show you what occurs on the day the ETF starts, give you the entire approval timetable for each business, and reveal the price goals that analysts are following. Now let's jump right in. Crypto Talk Hub is pleased to have you back. For those who are unfamiliar, we dissect the latest institutional crypto news devoid of hype. If you don't want to miss a thing when we report on the XRP ETF decision, you should subscribe. Okay, now we can dissect the schedule. The current status of each major ETF filing is as follows. The delaying amendment language was removed from Canary Capital's updated S1 on November 7th. The ETF might begin as early as November 13 without explicit SEC clearance because this triggers a 20-day automatic effectiveness period. Bitwise, Grayscale, Franklin Templeton, and 21 Shares are among the firms with XRP ETF applications waiting to be approved by the SEC. These anticipated approval windows are based on standard review processes. By taking advantage of the automatic effectiveness provision, Canary Capital is expected to begin in the middle of November. They will have first dibs in the XRP ETF market if this works. Launch is anticipated for January or February 2026, according to Grayscale's October filing. Franklin Templeton's submission is expected to take place in February and March of 2026, following a similar trajectory. Bitwise and 21 Shares are following Canary Capital's lead in implementing an automated effectiveness plan. It usually takes the SEC 45 to 90 days to assess applications for exchange-traded funds. The present government shutdown, however, has hindered the SEC's capacity to conduct proactive product reviews. The automatic effectiveness clause, which allows issuers to take advantage of the situation, states that a registration statement will become effective 20 days after filing unless the SEC steps in. Whether the SEC approves of staggered launches or requires coordination of a single launch date is the crucial question. The 10 issuers of Bitcoin spot ETFs were all granted simultaneous approval by the SEC upon its launch in January 2024. In July, Ethereum ETFs also employed the similar method. Nevertheless, Canary Capital might be the first to begin because to the shutdown's potential impact on coordinated clearances, we know exactly what to expect from the launches of Bitcoin and Ethereum, so let's speak about what happens when these ETFs become online. Day 1 of the debut of Bitcoin spot ETFs in January 2024 was absolutely phenomenal. The total trading volume for all issuers was $3.1 billion. With a volume of over $1 billion, BlackRock's IBIT was the market leader. The first hour saw a 4% increase in the price of Bitcoin as traders rushed to buy. By midday, the price had fallen 2% again as investors dumped their gains. Bitcoin experienced an 8% gain at the conclusion of the first week and a 15% gain within 30 days. A comparable, albeit more muted, trend was followed by Ethereum's ETF launch in July. About 40% of Bitcoin's launch volume was $1.2 billion, which was the volume on the first day. Over the first 3 days of trade, Ethereum saw a 6% increase. Unlike Bitcoin, Ethereum did not undergo a supply shock due to the ETF because the platform already has substantial institutional exposure via staking and DeFi. In terms of XRP's dynamics, we can anticipate a middle ground between Ethereum and Bitcoin. Thanks to Ripple's alliances with financial institutions and payment processors, XRP already has large institutional holders. When contrasted with Bitcoin, this indicates a less supply shock. The primary metric to track on the first day is volume. A significant indication of institutional demand would be a first-day trading volume for the XRP ETF that surpasses $1 billion. Price action is likely to remain range-bound if volume falls below $500 million, which indicates more cautious adoption. Do not be surprised if the first hour is really volatile. A 10% change in XRP's price in less than 5 minutes may cause certain exchanges to temporarily suspend trade. Traders gain from this common safeguard since it stops flash collapses. Exchange outflows are another important metric to track. Issuers are obligated to acquire real XRP and place it in cold storage custody when institutions make purchases through ETFs. Because of this, supply is reduced on exchanges and prices are driven higher. In the 60 days after the ETF was approved, the amount of Bitcoin in exchange reserves decreased by more than 100,000 BTC. The institutional connections that Ripple already has in place are a plus for XRP. Already, Ripple's payment infrastructure is being used by companies like WebBank and MasterCard, and these relationships may lead to more XRP sales. Beyond ETF speculation, this generates organic demand. Here are some reasonable target prices for XRP after approval, based on the market dynamics, the performance of Ethereum and Bitcoin ETFs, and other factors. Possible conservative outcome: shortly after the first ETF goes live, XRP surpasses $5–7. That is, if Ethereum-like steady adoption occurs and modest institutional inflows of $2–3 billion are made, Bitcoin must maintain a price above $95,000 for this to happen. Moderate scenario: $8–12 in the 6 months following approval. That calls for consistent purchases by large institutions. Good news from the SEC versus appeal to Ripple and the ongoing momentum in the adoption of Ripple's RLUSD stablecoin. Over $500 million in monthly inflows would be required. In a daring scenario, $15–20 within a year of the ETF's acceptance. That is, until Bitcoin starts a massive bull market and goes up to $130,000 to $150,000. To compete with big institutions that have announced XRPL integrations, XRP must gain a sizable portion of the international payment market. We also need